Salesforce, the stock has gone down 23% year to date, not having a good year at all, even though they continue to grow. And today, the market is selling off the stock after initially reading the earnings release. So it looks like investors are not liking what they're reading from their financials. They will be doing their earnings call. Maybe things will turn to the positive after the CEO and other executives talk to the market. During the day, during normal trading hours, they were up about 1.42. It seemed like they were rallying into the earnings, but I guess the earnings fell flat. Overall, this is a big business, $245 billion in market cap, revenues of 38.5 billion. PE this year is at 39, but next year it's going to come down to 21.69, which is very rational. Analysts think it's discounted by more than 33%. And after we have the haircut tonight, that'll be even a better discount. When I look at their growth, they've been a growing business forever and they've become very big, $38.5 billion of revenue. That's a pretty large company. They have terrific margins, but they just don't get a lot of revenue down to the bottom line. I think that's might be ailing the stock. They have 77% gross margins, but they don't keep that margin all the way down to the profit margin. Now, if they could be at 25, 35% profit margin, then I think this stock would really get exciting. They are expanding it year after year, but they got to do a better job. There was an announcement that they laid off something like 4,000 people. Maybe that's going to help the profit margin. It's unfortunate that many people lost jobs, but maybe that's what they're dealing with. So the free cash flow looks really good, 32.77. Free cash flow did grow much faster this time after these earnings were announced. The balance sheet looks really good. Lots of cash, more than debt. That looks really, really good. Let's see what analysts are saying. We got 31 analysts weighing in on Salesforce. The most optimistic analyst says, hey, this is a $430 stock. The most pessimistic one is at 225, which isn't far from the current stock price. So on average, you're saying, hey, this stock's discounted by more than 33%. That's pretty attractive. When we look at their forecast, they're going to keep growing. In fact, they're going to grow a little faster in about 2 years and really keep that growth. And the revenue is going to expand nicely. So days ahead look really good for Salesforce. I updated my valuation of Salesforce, looking at the net present value of future free cash flows for the company. And I also did a net present value of future earnings per share for the company. When I value the company using the free cash flow method, 42% discount. When I value the company using earnings per share, 26% discount. So combined, I'm at a 37% discount, meaning each share in my mind is worth $408, but they're trading for $256.